I'm Matt Bishar with NAREITWeek.com here in New York City for REITWeek 2016, NAREIT's Investor Forum. Joining me for this CEO Spotlight is Joe Coradino, CEO of PREIT. Joe, thanks so much for joining us.
Oh, thank you for having me.
Joe, I'd like to start by congratulating you. Your company was a gold winner in the Communications and Reporting Excellence Awards, which were handed out here at REITWeek. What does that mean to you, and why is that communication so important?
I stepped into this role about 4 years ago, and a huge focus of ours was enhanced investor communication. I mean, if one thinks about it, we've always had great disclosure. You know, Bob McCadden, our CFO, has been very focused on that. And so we added to that, in addition to the great disclosure, the tremendous investor outreach program, really led by our SVP of Communications, Heather Kroll, where we really reached out. We had, I mean, and this is not an exaggeration, hundreds of investor meetings, and been coast to coast, and really been getting our story out. So it's very gratifying to be selected from a stellar group of companies. I understand the largest attendance ever here, so we're quite pleased with it.
Now, a key part of that story is communicating the company's new strategy and redefined portfolio. Can you talk a little bit about the work that you've done and how that progress stands?
Well, we obviously have been very focused on transforming the company, and we like to think we come here as a bit of a new company. We've sold off close to $700 million in assets to date, and the bulk of that was really lower quality enclosed regional malls, which unfortunately had really defined our story. And one thinks about it, behind that, if you will, was this, very strong, very powerful portfolio with roots in both Philadelphia, the Philadelphia region, and the Washington, D.C. region. So it's really transformed our investor base, the analyst opinions on us, as well as our retailer, perspective, if you will, both on their part and our part.
And how much work is there still left to be done in terms of disposing of non-core assets? And do you envision being aggressive adding to the portfolio?
Well, it's gratifying to have achieved what we have achieved. On the one hand, I mean, every day's a new day. And we really have to look forward as, how do we continue to improve the company? And that would be its asset base, its balance sheet, its growth profile, and we continue to remain focused on that. And I think from an asset quality perspective, while we do have an asset or two that we'll continue to look to exit the portfolio, we also have a tremendous amount of remerchandising and redevelopment that's underway right now. We anticipate that our annual spend is going to be between 150 and 200 million, really upgrading and redeveloping our asset base. And while we're doing that, to continue to stay focused on maintaining a strong balance sheet with low leverage. And I think for the time being, that is our focus. When we don't see ourselves as being an acquirer of assets at this point, for a couple of reasons. One of which, there's not good product out there to buy, number one. But number two, we think we want to, focus on our core business, internally focused, again, improving the asset base through dispositions, redevelopment, and improving that balance sheet.
And as part of this strategy, the company's attracting a new kind of anchor tenant. How does that fit into sort of some of the broad trends you're seeing in changes in retail and consumer shopping habits?
Well, we've been able to really attract a completely new group of tenants to our portfolio, and those new anchor tenants certainly are what I would consider to be somewhat atypical, and include both value-oriented retailers like Saks Fifth and Nordstrom Rack, as well as continue to work with traditional anchors, traditional department stores. But also one looks into the entertainment. We were very pleased to have announced that we concluded what will be one of only 9 Legoland Discovery Centers in the United States. We'll open them up next year at our Plymouth Meeting Mall. We thought that was a real coup for us, because one thinks about the evolution of malls. Entertainment is a key piece of it, and add to that list Dave & Buster's at Springfield Town Center, and innumerable restaurants that we've included in our portfolio. So clearly the mall business is continuing to evolve. And the kind of tenants that one brings to properties, both anchor inline, there's no cookie cutter answer for it. It tends to be a asset by asset solution, but we're quite excited to be attracting the kinds of tenants that we're now attracting.
Joe, thank you so much for joining us.
Thank you.
Great. For more from REITweek 2016, be sure to visit REIT.com.